Hi, this is Nick Poller, and this is going to be an overview of our most recent report, our Q2 earnings playbook. This is our quarterly report that looks at the upcoming earnings season. So this report is called Rebounding Estimates Hit a Soft Landing in Broader Market. Okay, so the first chart should kind of clarify some of this. What we have on the purple line is year-over-year sales growth on the left axis. That's been declining from kind of the pandemic reopening acceleration. This is going through the end of Q1 2023. The revisions data, which is the blue line, goes through the end of June. And what we see here is that over the past few months, estimates revisions appear to have bottomed, and they're now creeping back up again. Drilling down at the individual sectors, you can see that 11 of the 14 sectors that we track saw estimates increase over the past 3 months. So here you can see the yellow triangles, which are the 3-month prior z-scores of estimate revisions, and the pink diamonds are the most recent z-scores for estimate revisions. So the way to read this is that for healthcare, close to earnings estimates revisions are up to close to 2 standard deviations above the historical average. A significant increase from 3 months ago when it was a little bit less than 1 standard deviation above average. Then if we look at the flip side, to the laggards, we see energy and financials. Financials was one of the few sectors that had estimates decline. You can see how the yellow triangle is above the pink diamond, and I think a lot of that can be attributed to the regional banking crisis, alongside the ongoing Federal Reserve tight money policy. So kind of drilling down a little bit further, here's a comparison of the earnings forecast for large versus smaller tech firms. The blue line is smaller tech. The purple line is large tech. You can see here that tech is certainly for MSX, mid, small, and micro caps. It's on the top. It's the 4th highest estimates as compared to the sector's history, behind healthcare, industrials, staples. However, these estimates have not climbed nearly as rapidly or as high as large cap. Something that should probably make sense given the exceptional mega cap tech run. That being said, the smaller firms, because of the less exuberant expectations, have more room to surprise the upside during earnings season, and should also be candidates for replacements for the larger technology firms, which have begun to become more polarized, more crowded, and have much higher expectations. So that's a quick overview of this earnings playbook. Something to look at the full report. We've got our earnings torpedoes and fallen angels. These are stocks that we think are either particularly vulnerable to a downward earnings surprise, or because they've been beaten down so much, and there's a strong negative conviction. These fallen angels could have the possibility for upside surprise. And in addition, there are also charts that highlight the sectors and industries that have had the greatest changes in terms of estimates. All right, thank you.